Hi folks, myself Raj. Welcome to our channel Code Shack. Thanks to everyone for watching our podcast show. And today is episode number 13. Our discussion topic is job report and its effect on red card. So let's start. Generally, connection between job report and red card have huge impact on the overall economy. Red cut effects on jobs. When central bank lower interest rates, it often stimulates borrowing and spending. This can encourage businesses to invest in expansion, leading to job creation. Lower interest rate can also make it cheaper for businesses to borrow, allowing them to fund projects and hire workers. Then job reports influence on rate decision. Central bank often consider job report such as non-farm payroll in the United States when making decisions about monetary policy, including interest rate. If job report include strong employment growth, it may suggest a robust economy, potentially prompting central bank to consider raising interest rate to prevent overheating and inflation. Conversely, if job report shows weak employment figures or job losses, central bank might consider lowering interest rate to stimulate economic and activity and boost employment. Therefore, there is a relation between rate cut and job report as both are indicators of economic health and can influence each other. A red cut can be used as a tool to address issues in job reports such as unemployment or sluggish job growth. Similarly, a job report can influence central bank's decision regarding monetary policy, including like the timing and the magnitude of rate cuts or rate hikes. On Friday, April 5th, US job growth blew past expectation and wages increased at a steady pace, suggesting the first quarter ended on a very solid ground. So when everything in roses, then potentially that gives the Fed a solid scope to delay rate cuts. Also, we can see the major downside. Also, we can expect a major downside in the stock market in coming months as investors will see rate cut is fading away. Check the drop box below. I have shared all details about job report. Friday's job report also showed the unemployment rate fell to 3.8% last month from 3.9% in February. The decline in jobless rate reflected a sharp rebound in the household employment. The unemployment rate has remained below 4% for 26 straight months, the longest such stretch since I think in the late 1960s. The US economy is outshining its global peers, even though the Fed has raised by almost 525 basis point since March 2022 to dampen inflation. The labor market is benefiting from a rise in immigration over the past year. Also, I think the immigration might have caused probably the employment benefit or the growth in employment probably. Though the strong hiring will help US central bank to delay rate cut, it is also very doubtful about the three rate cuts this year as the job report shows that there is a strong growth in job market. So probably the Fed will delay its decision of rate cut. We might see probably one or almost no rate cut. Or if the inflation keep increasing, who knows? There can be a rate hike too. So as per our analysis, probably the most businesses are locked in lower borrowing cost prior to US central banks tightening, allowing them the scope to hire, creating a big trouble for the central bank and keeping the inflation remain for a longer time. We can see in the job report the major jobs are created in the healthcare sector, then government sector, and leisure or hospitality sector. Surprisingly, stock market or stocks on the Wall Street were trading higher on Friday. The dollar rose against basket of currencies, and the US treasuries fell. We had 11 rate hikes by the Fed that held the inflation to tumble from its peak. But average prices are still about 18% higher than they were in February 2021. Crude oil prices went up almost 6 to 7% uh, last month. Also, on the first week of April, the crude oil price also rose around probably 6%, giving giving us signs that inflation is not going anywhere. It will remain stubborn for a long time. With the job growth report, probably we expect no or one rate cut this year. Let's see what we see. But one thing for sure, if the crude oil prices keep going up and the job report stays strong, probably we will see delay in rate cut. That's for sure. So that's everything for today. We want all our viewers to have a successful financial life. Hopefully, you guys like today's podcast. Please keep watching our podcast and keep sharing with your friends and family. We will try to bring in more financial topics that help you save money from borrowing and also keep you one step ahead from your lenders. Have a wonderful rest of your week. See you again in our next episode. Thank you.